to discuss during the session, or if in case they want to do it later, happy to take it. Right, so what I'll do is I'll share my screen and see if you guys can see my screen there. Can you see my screen?
Yes, sir.
Yes, sir. Your screen is visible.
Yes, sir.
Excellent. So let me just, so the topic which I had chosen today to discuss with you all is about reimagining risk management. And I'm sure why is this topic, and as the picture also suggests, risk management is not something very new to any one of us. It's been there for ages, and I'm sure you must have read a lot of journals, magazines, books, and there are articles which are on risk management. It's a huge, it's like a ocean, and there is no end to it. And the kind of a spread out web it has, because whether it is about credit risk, market risk, liquidity risk, capital management, operational risk management, they are all intertwined. And it is not going to be very easy to isolate them and discuss in each in each one of them in entirety in such a complex environment, in such a complexity. So that's the reason why I'm saying reimagining risk management, because that's going to be our way forward in, as what Dr. Sikri just shared, that we are living in the world of new uncertainties, which we probably had never imagined, or if we would have imagined, we have never been prepared ourselves to manage those. So let's pick up on this, which is basically, and I'm not going to read the slides. Of course, you are free to read the slides and understand. Basically, what I wanted to make a point here is that this is an unprecedented situation. It has never been there earlier, whether you talk about the previous crisis, economic crisis, this is much more than that. Not because it was limited to economic, but it was also limited to each and every individual across on this planet. And the elements which are being, I would rather say it's adding to the overall piece, is persistently low interest rates. We have more and more regulations coming in. We have competition which is coming in. And if I say competition, then competition is, while we would say shadow banks or digital entrants, it is about the competition, about the companies which basically would be, I would rather say, much more evolved and in a much better position to handle the crisis than others. So when we say you differentiate between a man and a boy, this is the time when the systems have been able to prove which is the best one. Now let's see, will the financial institutions continue with their traditional methods or instead fundamentally rethink how risk is managed? Can I take a pause here and understand from others their views, if they have any, whether our traditional risk management, which is more robust in nature, we have been working on for so well, will banks continue to work in that, or should we rethink?
Should we rethink, sir?
That could be rethink.
Should we rethink?
Okay, good. And what do you mean by rethinking? We are actually in an inflection point. So rethink would mean, should we completely turn around ourselves, or do we keep continuing with it with some new measures?
Yes, sir.
So we can
In the prior, hello.
Yeah, please go ahead.
Yes, sir. In the prior, banking services are all of the face-to-face services, and nowadays all the banking services come on mobile banking and net banking.
Mm-hmm.
So it's a new way of service delivering services.
Okay, there's one part of it, absolutely right. But that's only from the customer interaction perspective,
Yes,
from
sir.
the front end. What about capital management? What about credit risk? What about liquidity risk? Should we continue with the same? Any views?
Yes, beta, you can express your views.
And make it more interactive, I'm
Yes.
sure. And Views are basically, and I'm sure I should not use that word, but views are never stupid. There's always a viewpoint. And therefore, once if you share, then only we will come to know whether this is carrying a weight or not. So there's no right or wrong.
Yeah, definitely. And this is an interactive session, and please make it an interactive session only. It is not one-way communication.
Never mind. So let's move forward. In case if you have a views, maybe you can share it later. So what would happen if we continue with our existing approach? So one is inefficient processes. We would have the lack of capability to proactively identify and manage risks because we don't see the future. Dr. Sikri just shared that while predictive risk management is there, but we have not been able to envisage this situation. And then we are talking about, we don't have a holistic picture. And holistic picture would mean that it is not just about operational risk management. This is not about just about capital management. This is not just about liquidity management. This is about all risks which are so intermingled right now. And we have seen the stress in each one of them that it becomes very difficult to isolate. So therefore, a holistic view needs to be taken. So what do we suggest? And this is my view. So we have seen why, and I hope, do you see this additional 4 boxes there, or are you able to see my screen completely? Can you see my screen completely?
Yes,
Full
sir.
screen?
It is
Yes,
visible.
sir. Yes. Yes,
No,
sir.
we are able to see the part which you have shown in the PPT, but the other part
Boxes.
is not there. You just flicked it, and we could see the other part also.
Okay, never mind. So now this is what I wanted to show to you. And
All
I
right.
was getting the participants gallery there. So probably I thought
Okay.
you guys
Yeah,
also.
that's not needed. Okay.
Okay, good. So we have seen why do we need it, but how can we do it? And the basic thing which I understand being a part of the financial services industry for so long is that we need to actually transform boldly. We cannot limit ourselves the way we have been doing it. And that's the reason why I asked you that question. That is it that we would have to change some bit of it, or do we have to completely change? The objective is that if we need to tackle such situations which we are currently facing, or maybe in the future we would have a similar situation, then we have to transform boldly. And any bank or financial institution who is able to transform completely would be able to survive in this world of environment. How can we do it? And that's where what comes in. This is not a comprehensive list, but these are the ones which we have to look at from, I would rather say, as a priority, from a perspective that this is one which we need to focus first, and then we need to move into others. So when we talk about cyber risk and financial crime, which we fondly call as SciFi, which is a Deloitte term, cyber risk, as somebody pointed out earlier, that we have more digital, face-to-face is not there. Yes, of course. There are transactions which are happening, which are not face-to-face, and COVID has in fact given that opportunity across the segmentation of the customers, that people who were not even tech savvy now are using wallets and digital payments. And even the account openings are happening digitally. So cyber risk is going to be the key one which we need to be conscious of as we move forward. The other one is the financial crime, and financial crime has got a huge, I would say, scope. Financial crime also considers fraud. And as we see the economic situation going back to worse, loss of jobs, loss of no, or there is a unemployment, there is a businessman not effectively going in a pre-COVID profitability. then it is expected that the financial crime will also increase. And the more it increases, the more the banks will need to be conscious of and cautious of. Then we talk about data integrity and analytics. So let me tell you, it comes very fondly to me because moving forward, data will be the key. And if you do not have a data and a real-time information, when we talk about analytics, it is very important that we have a real-time information. If you do an analytics post facto of an event, it's not going to be helpful. So it has to be real-time. So data integrity, which is the correct data, and we also need to have a real-time information to do an analysis, which will determine senior management to derive the strategy. Then we are talking about digital and emerging technologies. Just let me give you a quote. What used to happen earlier is that we were so dependent on the transactions and the manual interaction of face-to-face interaction with the customer that we have never been able to identify what could technology do. And if we have to analyze the data, if we need to understand, reach out to the customer, we need to imbibe technology. We need to imbibe digital options. And if we do not do it, and this is across scenarios, this is not just limited to only operation risk. This is credit risk, capital management, liquidity risk, market risk, all of them. We need to adopt that. And if, as a financial management student, we need to understand that if we do not understand and learn those elements now, when we move into the organizations, we may not be keeping up pace with the requirements of an organization. The last bit, which is on agility, enterprise agility is very critical. And why is it critical is because we do not react to the situation proactively. We don't react to the situation in a jiffy, fast enough to take care of a problem statement. The banks who would have been able to do it, and I'm very proud to say it, the way HSBC has done it, I have seen in the last about my 16 years in HSBC, I have never seen those things happen which had happened in the last 6 months. People across the segment, whether it is business or risk, they came on the table and they were willing to take that risk to give an opportunity to handle the situation. In the past, they have been quoting laws, rules and regulations, policies, and I'm sure that it's very difficult to get things moving. But the way they have done it with an agility in the last 6 months, it's been amazing. So enterprise agility is very important. We need to rethink the 3 line of defense. Are you guys aware of what 3 line of defense is? Yes, no?
Sir.
Sorry, I missed it. You said yes or no?
No, sir.
Oh, okay. So 3 line of a defense, I'll give you a little brief here so that you understand, because that's the basic structure of a risk management, and especially in the risk, in operational risk management, is you have a first line of defense which rests in the business. So anytime, any event, any risk which happens, the first control is there in the business itself. So the first line of defense could be a teller operator, could be a control function sitting in the business who does the regular checks. That becomes the first line of defense. The second line of defense is basically the risk stewards, where these departments like compliance, financial crime risk, security and fraud risk, legal risk, these are the departments which are formed, which provide an advisory, and they are the subject matter experts to the business. They are called the second line of defense. So if there is an event which happens, or if the event has to be introspected, then the second line of defense with their subject matter expertise provide a view and advisory to the business. The third line of defense is called audit. And that audit's work is to ensure that the first line and the second line defense is working effectively. So they do a regular view on to understand whatever the policies or the procedures or the regulations which have been instituted by the internal and external control teams, have they been followed or not. So this basically structure which is there in organization to take care of the risk management. And now in the new position, we just need to think of these three line of defense, whether it will work in the new environment or not, and what would be the alignment of the risk team. The next most important thing is do more with less. Let me tell you, this is something which uh, we have been working on it for last so many years. But as we move forward post-COVID era, this becomes more and more important because of the cost pressures. The margins are going down. Business will not make profit. Then therefore, we would have to ensure whatever we do it with less expenses, less cost. So one person would maybe have to be more productive than four people who would have been working on this job. That's the kind of a magnitude which we are talking about. Uh, the, the thing which is very close to my heart is establish a formal conduct and cultural program. This culture program and conduct program is something which is evolving in the current environment across uh, industries, not just the banking, especially in banking, to reduce internal frauds, to see if there's something which is not happening right, then raise it, escalate it. So conduct means the way you conduct yourself or the values which you believe in at home. When you go down to the workplace, you demonstrate the same. And this is what is going to be required in the organizations going forward, with much more priority and much more emphasis than earlier. So earlier, I'm sure there are certain organizations who would be more interested in the results rather than the way it has been done. Now the organizations are more interested in to see how it is done, so that we do not, we are not caught in the wrong side of the law. Reputational management is the key, uh, I would say, an offset for this conduct and culture program. We have seen cases of Ghaziabad and Nirav Modi's and Ramalingam Raju and Satyam, and there are many of them. So it is very, very important that how do we do it. So conduct and culture program would be very, very important, and you would have to believe in what you're doing, which is right. The last one, which I think, and which is my opinion, is also going to be one of a key factor, is embrace resilience. The banks and the financial institutions who have embraced resilience in the current environment have been able to succeed than the ones who may not have done it. So adapting to the change fast is what is required. Just to give you a basic, say a kind of a view on what resilience means is, you guys are aware of the call centers, that they are located at one specific place, and they are confined, those set of people who are sitting on the desk with their headphones on and who are continuously doing a customer service from that contact center, are never expected to even carry a phone of or a mobile device of their own. Even the PCs or the laptops which are kept on their workstations were quite secured. They cannot do anything with that. So data security was critical out. But the moment COVID started, I am not sure how many of you have experienced, call center for the big institutions have not stopped. The call center executives are taking the calls from their homes. They have been provided those instruments and those devices at home to operate on it, so that the customer service is not impacted. That's the kind of resilience I'm talking about. Quickly, and I can tell you about HSBC, there are a lot of others who have also reacted. If you talk to any of the call center person, whenever you are asking whether it is a Vodafone, Airtel, or any of the other services which you are taking, and ask them informally, where are they operating from? And they will say working from home. That's resilience. So reacting to the situation fast so that they can change and adapt is going to be important. Business continuity is going to be very important. That will bring in a lot of risks on the table. But how do we manage those risks is important. How can we do that? Stress testing. Have you guys heard of stress testing?
No, sir.
Okay.
So actually, pilots, whenever there is stress testing for pilots, while they are undergoing their training session, they need to go through stress testing so that in any pressure in future, if are they able to manage that stress or not.
Good, Shivani. I think what you have just explained is a mental stress, how to react into the situation when an individual is undergoing that crisis. Similar needs to be adopted in an organization also. So there is a concept of stress testing which has been there for some time, but it has not been aggressively followed by the financial institutions or the industries. So what stress testing does is they have multiple parameters for any of the risks. So let's talk about capital management. So if I have a capital which is there today and I have a parameters which are impacting my capital, which could be a risk-weighted assets, which could be a risk-weighted assets from the retail, corporate, real estate, mortgages. There are multiple things which can come in. Now we would have to see if there is a stress, a parameter, say mortgages, there is a slump. It goes down. You do not have a demand. It's completely shuttered. Mortgages completely closes down. Or there are higher NPAs in mortgages because customer is not able to pay up. Or say, for example, there is I would say, a force measure, an act of God. The building where we would have given the loan as a bank or financial institution is finished. It's down to the crumbles. If that events happen, what would happen to the organization's capital? How would we be able to tackle NPAs? How would we be able to tackle these losses? And how do we mitigate those elements which can happen and would have an adverse effect on our capital to take care of it through controls? So the way you have described about a pilot, similar works in an organization. So I would encourage you guys to read if you have not read about stress testing, because stress testing is going to be the power for risk management going forward. It's,
Sir,
sorry, go ahead. Any questions?
sir, actually, stress testing is used for like the virtual training, like the demo of any technical training, like the training of pilot and the loco pilot training, sir. We can demo the stress training to adopt the employee as per their conditions.
Absolutely.
Yeah.
So this is more of a mental stress testing, right? How do you stress test in case if you're, say, rolling out a digital solution? You would have a statistics course, right? You would have done a QTM or a statistics course. Have you done a regression analysis?
Yes, sir.
Correlation,
Yes.
regression.
Yes, sir.
What does that indicate? Anything, whatever you know. So I'm
The
sure.
relations of two variables.
Yeah, good, very good. So what does it do?
Actually, sir, it's compare the relation between the two and what are the changes that affect the related to one aspect to the another aspect.
Absolutely. So it is not just limited to two, which is, you're absolutely right. It
Like
should.
in the market, yeah, market related to the market industries.
So
Yeah.
if there are multiple variables, they are actually impacting each other. So if you have a one variable which goes bust, what would happen to the rest of the variables? Which variable will be highest impacted? That's the kind of a work which regression will do. When we go on to the stress testing, then we start working on those regression or those relationships to see what could be the impact if one of the variables get impacted, or two variables get impacted, or three variables get impacted. What would be the overall impact to the organization? And depending on whatever. So today we are talking about the risk management from a capital perspective. It could be done on a liquidity management, liquidity risk management. It could be on your operational risk management, which probably is going to be very critical. So today it is important for us to understand that regression or correlation is existing between multiple variables. How do we ensure that we test those variables in a worst case scenario to see what could be the impact to the organization? Like the case of COVID. Nobody did a stress testing for a COVID. That what happens if suddenly, have you heard of BCP, business continuity plans? Okay, so what happens in an organization is, and it happens across the world, is that if there is a particular office which works with, say, 100 staff, and in the event that particular, say in Mumbai, we work in a building where there are 100 staff are working, and that particular building either is, we do not, the 100 employees do not get an access to that building either because of a terrorist attack, or because of the flood situation, or because of any of those, say, protests, etc. And that suddenly those 100 employees are completely out of reach to the office. So there is a continuity plan which has been created by the organization, that in the event those 100 do not reach there, which ones are the criticals who would need to be working on time immediately. And if they can work from home, they will work from home. If they cannot work from home, is there any alternate site? Say a Mumbai guy team can have a Chennai as a site to work on. That's called a business continuity plan. So it continues. My business does not get stopped. It continues. And again, I'll take an example of a contact center or call center where if something happens and that contact center is based out of that particular building, customers may not be able to reach out to those customer service guys because they have not been able to reach office. Then it is expected that maybe we should have a continuity. The Chennai team, who is an alternate for those call center, may be able to take about 40% or 60% of the calls which are coming from the customer. At least we are able to address 60% of our customers. But that was envisaged from the perspective that what happens to a particular location. Nobody envisaged that Bombay, Chennai, or if there is any other location, all of them are going to be shut down. Nobody, no staff will be able to reach their office and do their duties. So the continuity plan completely failed. The organizations who were working on work from home concept did manage to survive. But the organizations who were not working from home never allowed neither the IT infrastructure support